All right, this is Rob with Backyard Accounting and Finance. I wanted to go over debit and credits with you today. A lot of people get kind of hung up on this, at first, because if you're going to school, um, they'll only see this. They don't have an exact breakdown. Uh, they only hear assets, expenses, liabilities, and your revenue and first, and if if you start off debit and your credit is your debit's always on the left side, credits are always on the right side, and they always got to equal no matter what. No matter what. Now there's sometimes on your computer programs, if they don't equal, it won't let you go carry on to the next page over. Um, there's there's sometimes that um, whenever you pay somebody, or say if you owe somebody something, and say that you owe them $10,000, but you're only paying 7,000, and it doesn't equal up there, but you're still going to write it in. So those two are always going to equal out. So that even though you owe $10,000, is that you pay seven, but you owe three. Is that whenever you list it on the page, you is that you still owe 3,000, which is going to carry over to the next month. So it'll always equal no matter what. Period. Now, when we look at assets, we're going to look over here for these are just partial like examples, but these are the ones that are going to pop up the most. Cash is going to be the biggest one. Your accounts are receivable. It'll actually be an A, then a slash, and then an R. Um, then you have inventory, and you have equipment after that. So your equipment can even break down even like each one can break down into more uh, pieces. Like your equipment can be farm tractors, trucks, things like that in nature. Cars, like office equipment that you're using for printers and things like that. Those are all going to be assets. So, so after you understand, that these can come down some more, and so thing also for the inventory can also come down because it's what you have in your inventory, um, and then everything else. But these are just prime examples. Your draw is basically where the owner of the business, he or she, is going to take a draw from the company to themselves, and they need money. So so they're going to take a draw out from their company to pay themselves something. So they might need something like who knows, they might want to purchase a boat. So if they pull $60,000 out, they have to show that they pulled $60,000 out, and that'll always go to equal no matter what. And then finally, for your expenses onto your debit side, is that it's exactly what the word means. So your expenses is like what you're paying out, could be each month, uh, like lights, rent, utility, the internet bill, so forth like that. And